while macroeconomic policy probably contributed to the conditions in which the crisis occurred, the ultimate cause of the depth of the crisis was a deeply flawed regulatory and supervisory regime, deeply flawed in design and deeply flawed in implementation on both sides of the Atlantic, and it would be hard not to do better. The paper that Brookings have published covers a whole load of technical things because it's a technical subject, but I want really to pick out one or two things that are more in the realm of political economy. And there's good news as well as, I think, some challenging news. The good news is something which, if I may say so, I think the Ben Bernanke's Federal Reserve System has a great deal to be proud of, which is stress testing. I think this can potentially revolutionize bank supervision over the coming quarter of a century. I think it will take some while to play out and mature, and I think it will be some while for its full effects to be seen. But it's revolutionary in two respects, or perhaps even three. First, and this is not trivial, it gets the macroeconomists and the supervisors within not only the Federal Reserve, but other central banks to work together. This is a necessary condition for central banks to have the broad mandate which they are now returning to. Secondly, it makes regulators look at banks in a joined-up way rather than atomistically. If you like, this is part of the macroprudential label. But I think almost most importantly, I think it can transform the accountability of the Federal Reserve and other central banks and regulators around the world to legislatures and the public. Monetary policy is something where over the past 10, 20 years it's become increasingly transparent, and what the public gets is what it can see on the tin. The laws, the regimes, the models, the policy deliberations. Bank supervision has been opaque, mysterious, of interest to the public only when it goes wrong. But when it goes wrong, suddenly it's and rightly of enormous interest. By having an annual stress test, putting the degree of stress that is going to be applied to the institutions into the public domain, and the results of the stress test with named institutions in the public domain, that gives members of Congress, on behalf of the public, an ability to ask the Federal Reserve and the OCC and others questions about supervision that they have never been able to ask before. I think that is a massive step forward, and I think it's very important, for those of you that work on the Hill, I think it's very important that Congress delivers in asking those questions on the stress tests each year.